Morning, everyone. Thanks very much for attending. So the team at Mpowered and Mazars actually planned this webinar a few weeks ago. And I have to say, I was a little concerned on the relevance of the topics that we selected to speak on, given that we would be discussing the impact of COVID during the second week of July, which is where we found ourselves. But I have to say, I'm sure you guys are following the news. We've seen how Melbourne and Australia is now going into its second lockdown. They're going to be in lockdown for the next 6 weeks. States like California and Texas are reporting more than 10,000 new cases every day. Many of the states in the US are now pausing their plans to reopen. And sadly, we've seen that the numbers in SA are ramping up. So we know that the local economy continues to be battered by COVID. As local cases spike, we can only expect to operate in a low-touch business environment for many more months to come. So a low-touch environment, I guess, is another way of saying there'll still be a lot of remote work happening, whether it's complete remote work or people being staggered, in terms of their presence in the office. So today we're going to explore the impact that both a severely weakened economy as well as a low-touch business environment are having on BEE compliance. We are aware of various submissions that have been made to the DTIC around easing BEE compliance targets, but we're certainly not seeing any indications that they're going to ease anything related to BEE compliance. I'm sure many of you might have seen a couple of weeks ago on the 19th of June, President Ramaphosa said that SA's BEE regulations should in fact be enhanced as part of a push to build a more inclusive economy in the wake of the coronavirus. So today we've got a great panel of BEE experts. We're going to have an intro by Mazars SAC co-CEO, Anup Ninan. Anup is the managing partner of Mazars Gauteng, and he's the co-CEO of Mazars South Africa. We then have Sandika Balrashi of Mazars SA's BEE Consulting Division, and she's going to speak on the impact of COVID on BEE compliance goals, objectives, and targets. She assists clients with the interpretation of the dynamic legislative framework that we all operate within. Mohammed Khan of Mazars SA's BEE Verification Division will then speak around scorecard compliance and verification as a continued priority for companies. After Mohammed, we have Mahadi Rametsi of KG Transformers, who's going to discuss how the impact of the lockdown has become a catalyst for digitizing BEE compliance management. I'll then be speaking about digital BEE scorecard verification. My name is Bruce Rowe and I'm from Mpowered Business Solutions. I worked in the UK for a few years as a banker and then moved to SA in 1998. I moved into management consulting before joining Mpowered in 2005. Our panel would have each had a chance to speak, and I think they would have pretty much largely advocated a transition to managing your BEE compliance journey digitally. But then the question remains, are businesses ready to digitize their business processes? So we've got Darren Lang of UCAN Courses, and he's going to give us some insights into digitization within the small medium business sector. Darren is an experienced CA turned EdTech and learning design specialist. He's the founder of the UCAN Group and assists businesses overcoming learning challenges through all-inclusive learning solutions. So that's our panel for today. So without further ado, Anup, I'm going to ask you to unmute yourself and let's get started with an introduction. Thanks very much.
Thank you, Bruce. Good morning, everyone. I do hope you're all keeping safe and well during this time. I just wanted to give you a brief introduction about where we are as an economy. As you know, we are expecting a GDP contraction this year of around about 7.2%. That's what the Reserve Bank is estimating now. We expected to lose up to 2 million jobs, which is incredible. And our youth unemployment is already sitting at 54%. So it's really a tough time at the moment. And I think small and medium-sized businesses have been hit the hardest. Fortunately, there has been some relief in terms of funding that has been available to the small and medium-sized businesses. and some of the businesses have been able to operate as a result. And there are some sectors that have been hit really hard. I think hospitality, as you all know, has been hit hard. But I don't want to just leave you with the bad news, because there is good news. There are a lot of companies, a lot of small businesses and medium-sized businesses that have disrupted their business model. They've looked at other ways of operating in this climate. They've seen that this is not going to be a quick recovery. It's going to take time. And I think that's the resilience that we see out of South African entrepreneurs. And really, it is something to be said about that. And, you know, in the peer group that I speak to, it's quite a mixed bag. There's a lot of businesses that are surviving and a few that are actually doing better than they were pre-COVID. I just want to leave you with that. And the problem with this place that we find ourselves in is that the CEOs are working overtime to find new solutions, look forward, see how we can reestablish our businesses and look for new service lines. And in this period of time, we sometimes tend to put, and I've heard it from many people, put transformation and BE on the back burner. So I would like you all to consider this. What COVID and what the lockdown has done globally, and I think this is not a South African, it's a global trend. It has shown the inequality around the world. We've seen it in the USA, we've seen it in Europe, we've seen it right across the world. And this is an issue that has hit South Africa really hard. I think you all can agree when we saw queues over kilometers of people waiting for up to 15 hours just to get food. You know, I mean, that is heartbreaking. And as South Africans, you know, this is something that we need to address. And this is where I come to in terms of what I believe the BE codes were meant to do. They were meant to create an inclusive society and inclusivity into our economy. And as South Africans sitting at the place where we are with almost, if we're saying 30% unemployment before, and maybe close to 50% if we do lose 2 million jobs, we're going to have to, as South Africans, all come together and react to this. This is a situation that affects every single person that lives in this country. So I think from a point of view, from a Mazars point of view, we have put transformation, we've embedded it in our culture. It is part of our purpose, is to navigate the success and development of young people into the profession. Now more than ever, we believe we need to continue the initiative that we've started. So we've started youth employment initiatives. And you know, the one that I just wanted to chat quickly about was our youth employment service, which is a government-backed project to get youth into employment. As Mazars, we've taken quite a few of these youth. They are dynamic people, they are qualified, and we found a way to now get them to be included in our new economy and the new way of work. So we started training them on data analytics and getting them into helping us with doing remote IT auditing. And that is the way of the future, and we need to be cognizant of that. So I think this is a project that we have continued to support, and we will continue to support. More than ever before, we need to continue supporting our suppliers. And we have many black suppliers that would be out of business if it wasn't for us. So really, it is important for us to continue to support that. And now more than ever, we need to continue to support our employees and ensure that they are able to support their families. So my last word on this is, true empowerment is not about a scorecard. It is about creating inclusivity in the economy at the moment. And it is about job creation. That's the key today. Job creation and retention. The scorecard is a great way to see how you are coping, how you are improving between last year and this year, and how you compare relative to other firms. And I think this is where we have partnered with Mpowered, because we believe that every company should know where they sit at any point in time, understand the impacts of the economy, and see how they can improve what they're doing and contribute to the initiatives in the country. So with that, I'd like to hand over to Sandika to take us through some of the codes and the impacts of the codes. Thank you.
Good morning, everybody. Thank you, Anup. He's had the easy task of introducing the COVID situation, and I'm going to get down to the nitty-gritty of your actual scorecard, your compliance targets. Companies have been asking the question, will there be an exemption or suspension of compliance to the BEE codes due to COVID? This was put to the commissioner, the BEE Commission, and their response was that the BEE Act is applicable during the lockdown period, and all measured entities are required to comply with the requirements. Failure to comply with this will be in violation of the BEE Act. So this leaves companies with the task of having to now re-look at their compliance targets that are usually set at the beginning of your financial year. So companies that have just finished their verification or their financial period ending end of February and end of March will now be setting their goals and objectives for the next financial period. And those companies that have December year ends are now going to have to re-look at their targets and scores. The turnover and net profit after tax are two components of the scorecard that determines your goal setting. A turnover will determine exactly what type of verification you're going to require. If you are on the border of a threshold moving from an EME to a QSE or a QSE to a generic, your targets and goals need to be realigned. The net profit after tax, as we know, also is used to determine your enterprise development, your supply development, and your socioeconomic development initiative targets. And therefore, a review would need to take place if your business has been impacted by COVID and your estimated targets are going to drop as a result of this. What will the impact be specifically on the 5 elements of your scorecard? As we know, ownership is a priority element, and any changes to your ownership target could lead to an overall discounting. So when we look at ownership, the net value calculation is based on the value of the shareholder's share and the value of the debt incurred by these shareholders when the shares were acquired. The calculation will measure the extent to which this debt acquisition decreases over time and the value that is transferred to the actual BEE shareholder. Due to COVID, the value of the business and its shares may be impacted, and the debt may not be reduced as expected. The net value calculation would need, the subminimum of the net value calculation would need to be met in order to achieve your ownership points. Non-compliance of this could lead to a level 1 drop on your overall scorecard. Moving on to the impact that management control and the targets that you've set. Although management and control is not a priority element and the actual calculations are based at the point of verification, we currently know that companies there's a halt in recruitment, there could be restructuring, retrenchments, and it's very difficult to actually set your target up front. So this is going to be a moving goal, and this management control ties very closely to your skills development, because if you're a generic enterprise, you are going to be having to look at your economic active population and help those target markets to grow, and then linked to that will be your skills development. So we need to employ the correct mix of employees and then train those very same employees to have an impact on skills development and improvement in our overall scorecard. The impact on your skills development, there's been a lot of debate around your skills development levies and the holiday that some companies may have been allowed for 4 months. However, the target will remain the same. So the leverable amount will speak to the total remuneration paid and is not affected or impacted by the payment holiday. Therefore, the target will be based as per the total revenue as per your annual financial statements. This is the ideal opportunity for staff that are working remotely and have time on their hands to actually engage in skills development initiatives, enroll on online courses, use this opportunity to develop their skills and resources so that when we go back to the new way of work, we are equipped to deal with the challenges we face. Your enterprise development, supply development, and socioeconomic development targets are based on your net profit after tax. Companies that now are experiencing this financial situation may feel that their targets are not going to be met, or the forecast that they initially set may actually be way in excess of what they can currently afford. Therefore, if your net profit after tax is decreasing, businesses must review their initial forecast and reconsider their planned initiatives to ensure that you don't overcommit these initiatives and don't overspend, but at the same time, heed the call to help those communities that require the assistance. So in closing, I can say that there is going to be no exemption of your BE compliance due to COVID-19, and therefore companies that want to be considered as good corporate citizens will need to maintain the objectives of the BE Act and codes of good practice, review your initial goals and targets set against your current financial position, and then reset and align these goals and targets to maintain or improve your BEE level. I will now be handing you over to Mohammed Khan, who will take you through the actual verification. Thank you.
Sandika, let's have a quick break, if you don't mind. There's a couple of questions, and given that there's only two, let's go through them now, if you don't mind. So the first one is, can you clarify the effects of the skills levy holiday on the overall expenditure targets for skills development?
Okay, so we have clarification from SANAS stating that the skills, a company will have the skills development levy holiday. However, at the point of verification, the assumption is going to be that there was no break in that. So we would look at the total payroll paid out to the employees as per the annual financial statements, and your percentage is now going to be based on the annual payroll.
Yeah. So it's not really a holiday per se, it's just on the reduced salary and wage bill of the company in that given year, right?
That's correct, yes.
Yeah. Okay. And then if a learnership can't be completed due to, or I suppose within lockdown, can they extend the end date of that learnership or the completion of that learnership? You know, could they conclude that in the next financial year? And then I suppose, you know, the question would go on to say, when would the recognition actually take place for that learnership?
Exactly. So as we know, with the new Gazette that was implemented from the 1st of December last year, absorption for a generic company is based on their total number of employees, and there's a target. So the learnership can be extended because we do understand that it may be not completed, but the absorption of the candidate would be the issue.
Okay, thanks. There are a couple of more questions, but I'm not going to go into them now. I think let's go, let's move on to Mohammed.
Good morning, everyone. Thank you, Sandika. I want to dive straight into it. You know, the topic that I'll be discussing is the scorecard compliance and verification as a priority. I think that, you know, just to highlight what BE compliance is actually about. As we look to the right of the slide, it says it allows for participation in prospective business. And this is not just about being awarded tenders, it's also about building partnerships with, you know, whether it's Black-owned businesses as well as white-owned businesses. The other one is allowing to be competitive amongst non-compliant competitors. By being compliant makes a Black-owned business eligible for grants and obtaining finances from different financing houses, as well as government initiatives. creating employment, as Sandika has also highlighted a few points there, and provides enterprise and supply development assistance. And I think that's also a major part, especially in now, you know, in the times of this economic pandemic. It's actually highlighted a lot of these, you know, these structural inefficiencies, structural issues that we've had, and it stems down from past issues that we've had, and I'll discuss that now as we go on. Do I think, you know, in compliance and verification? Yes, certainly. All entities are required to comply or required to implement BEE as outlined in Statement 000, as in the Codes of Good Practice. BEE compliance is linked to the Constitution's goals. You know, as I've heard, you know, many talks, especially coming from the BEE Commission, it is aligned to the constitutional Constitution, where it almost tries to. It's a measurement that can allow these inefficiencies to be, if I could say, rectified, you know, and past inequalities to be rectified. The next point is there an exemption from implementation of the compliance? Unfortunately, you know, it's been raised. There has been a few, you know, court cases that have come up, and it's been dismissed. You know, and I think, you know, the suspension of it is more, you know, it's more so what can we do in this time? And as Anoop mentioned, you know, BEE is not a tick box exercise. It's an inclusive rather than as an exclusive process. It doesn't allow for only including Black-owned enterprises. It allows for both, you know, white-owned businesses as well as Black-owned businesses. Nothing stops a white-owned business from achieving a specific level, you know, and getting compliancy. And it also facilitates participation, you know, participating with Black-owned businesses, with white-owned businesses, coming to a consensus. So, yeah, look, in terms of the cases that have arisen, the BEE Commission stands strong and says that, you know, you know, BEE is here, and, you know, it's part of our constitution, and no changes should be made, or suspension, or at least alleviated, if for lack of a better word. And if we can go to the next slide, you know, it's just a summary of what's been happening. And I just want to highlight on the first case, as we said, there's been a few cases that have been raised. COVID-19, it basically simply demonstrated the deep structural inequality, and I quote that, in the economy. And being BEE verified, it's only a measurement to ensure that these inequalities are corrected. You know, they are addressed, and it's about transforming. It's not about, you know, giving a non-compliant certificate and say, well, I've done my tick box exercise, it's a submission, etc. It's about transforming, you know, not remaining non-compliant. It's continuing, you know, throughout as you progress, going from non-compliant to level 8, etc. And will businesses support cheaper non-compliant suppliers given the current economic climate? Look, I think, you know, it's all about, at the moment, we've got enterprise and supplier development initiatives. And what these larger enterprises or larger companies do is that they support them in terms of enterprise and supplier development. And this is measured on the BEE verification and scorecard. Now, in the specific times, in the COVID-19 time, there is a lot of, you know, new target setting, etc. And this is going to affect it's going to cause a ripple effect down to the enterprise and supply development, where less contributions are going to be made, etc. So, and another point, and also to bring in, you know, the previous what Anoop said about inequalities, is BEE shouldn't be viewed as a burden, because I think that's the main reason for tick boxing. You know, why is everybody just doing it just for the sake of doing it, and ending up not to be compliant? And also, why should verification be done? Transformation is still a much needed tool to ensure equality and broader participation of Black people in the economy. And, you know, especially in these times, you know, when we say verification is a grudge purchase, or it's a burden, you know, the analyst or the verification takes place over a period of time. The analysts come out and do the verification. You know, SANAS has now allowed us to do alternative verification methods, where on-sites can be done remotely. It can be conducted via video communication, etc. Which, you know, in my opinion, from my experience, I found that it aids a lot of these inefficiencies that we've had. You know, it's driving to the client, it's flying, it's additional costs, etc. It's saving the client all these additional costs. And make no mistake, it has been a challenge in certain certain sectors, especially in terms of what type of BEE software verification tools that are being used. And I think, you know, as time goes by, I don't anticipate this actually being, I anticipate it being continued for a number of months, where we will be doing verifications on site. So, you know, the hassle of going through a verification process has now almost, been made a lot easier, if I want to put it that way. So look, I'm very, very strong. I stand by the verification compliance in terms of going forward. I think, you know, SANAS, the BEE Commission, has obviously addressed many issues which allows for verification to continue in a much simplistic manner.
Thanks, Mohammed. I mean, you know, you mentioned then, it's on the slide, that BEE should not be viewed as a burden. I mean, I agree, but I think we can even change the narrative to BEE or compliance or transformation actually becomes an opportunity. So I'm not sure if everyone's seen, but a couple of weeks ago, once again, President Ramaphosa announced that there will be about 276 projects under the Sustainable Infrastructure Development Program. And there were a couple of themes that came out of that announcement. The one was transformation, the other was inclusive growth, and the other one was development. And, you know, as we come, at some stage, we come out of the economic impacts of lockdown. You know, at the end of the day, economies like ours, the catalyst for growth has to come from government. And I'm not referring to government bailouts or funds to tide companies over during this time. I'm talking about how we come out of this and facilitate some growth. And clearly the objective of these 276 projects is to facilitate immense growth and development. You know, arguably during these times, the small, medium business sector will also be a catalyst for growth. You know, it's a big percentage of, as an employer in the country, I think, you know, there's going to be a lot of opportunity for the small, medium business sector to grow and come out of this stronger. So, I would see it as an opportunity for growth, particularly in this environment. So, I think I'm echoing what you're saying, but it's important that we all change the narrative to can be an opportunity for companies. I'm going to hand over to Mahadi now.
Thank you, Bruce. Thank you, Mohammed. My topic is the lockdown the catalyst for digital BEE compliance management and verification? And my answer to that is yes. And I'm going to give the reasons as I go along. We all don't know how long this virus or this COVID is going to last, which means the restriction and the legislations or all the regulations around COVID is still going to be with us. And that makes the compliance of COVID to take the center stage in businesses, because businesses, they have to make sure that they put all the processes in place to make sure that the social distancing, the desk are not close to each other, people sanitize, the office has been sanitized. So we see COVID competing now with the BEE compliance for an attention. So it's going to require the level of commitment and engagement to be very high from the business side, which makes the digital space now to be more open when it comes to verification and managing the BEE. And we all know that the BEE can be one of the most complex or time-consuming requirements, particularly for South African businesses. And it's because of the evidence that is needed. Because when we look at what the BEE Commissioner is all about, they are all about the evidence of what you are claiming. And hence we see SANAS coming to check or verify that the evidence that you are claiming to say we've got ownership or we have done this project. And we know that this compliance is going to be with us for a very long time. So hence I'm saying the lockdown or the COVID, it is the catalyst for the digital BEE compliance management and verification. So, and when it comes to the BEE verification process, we all know that the process is very complex and it requires most of the time the communication that is going back and forth, because the BEE verification agents will be saying to the measured entity, we see the claim that you have submitted. And the other thing is that the claim are being submitted either by hard copies or via email, or sometimes with your electronic cloud folders. But most of the companies, even to date, the ones that are listed companies, they wouldn't know how to index all this evidence that they're submitting as a claim to the verification agency, even though the verification agency most of the time will give them a spreadsheet to say this is how you're supposed to submit your claim. We see that it's not submitted as the verification agency is required. And the other thing is that that evidence or that data that is being submitted is not always secure, and the data protection of that particular measured entity cannot be guaranteed. The amount of information that is being submitted to the verification agency can be enormous, because if you are a listed company, just on one element, there will be close to four files on management control only. There'll be 4 files because we need the contract of every employee, we need all those things. So it's just too much. And documents, sometimes they're missing, the verification agency does not have that, whatever document that they have requested. And errors easily occur from the data sheet population through to the evidence submission, which often prolongs the verification process, because the verification process is supposed to take a certain period. When the verification agency engage the measured entity, they will tell them that within 4 weeks or within this period, we would be done. But sometimes because of this evidence, because of the errors that have occurred, it takes long, it prolongs the whole period of verification. So we need one system. We need one BEE management system that can be a solution which encompasses all aspects of compliance, bringing digitization and automation to bear. BEE compliance management software is going to be the song of the day. Everyone is going to need the BEE compliance that is reliable. And to date, like an Mpowered BEE solution that they have, is the best solution that I have seen in the market, because it removes the complexities and the human burden of BEE compliance. And it helps both the consultant, both the measured entity, and even the verification agency, making it easier to manage the verification process. It helps an organization to stay ahead of the interpretation issues. And with the interpretation issues, these are the interpretation issues as per the BEE Commissioner and the DTI and SANAS, ensuring that all compliance efforts are aligned with verification expectation. It ensures a seamless flow of data, evidence, and scorecard to all the necessary role players throughout the BEE compliance journey. So yes, my answer to the question is yes, the BE compliance is going to be the catalyst going forward. I'm going to be now introducing Bruce. Bruce is the owner, the director, and the ideator of Mpowered, and his topic is going to be the digital BE scorecard verification, here to stay. Bruce, over to you.
So I think it seems clear that there is an imperative to maintain your cadence around BE compliance. So it's an effective approach for both managing BE compliance and verifying your company BE scorecard as required. But it should really take into consideration this low touch work environment. So for a moment, let's consider the general BE verification landscape. It takes a lot of effort and time to prepare for a scorecard verification. I think we can all attest to that. And particularly for companies that don't proactively manage compliance throughout the year. We know that BE transcends different functional business areas, including HR, L&D, finance, procurement, supply chain, CSI, if that's a division within bigger companies, and then other business functions. But then to add to the complexity, in many instances, these stakeholders are replicated within different divisions or subsidiaries. So it's important for all internal as well as external advisors and other stakeholders to be aligned around the approach and the process to complete a scorecard verification. What we're seeing is, there's a recurring challenge when companies are preparing for verification. And in a lot of instances, that stems around the differences of interpretation of the codes. So, aligning consistency across different stakeholders is challenging, but it's an absolute must. It's essential. And through scorecard audits, in many instances, that's where things get complicated or slowed down or become quite tedious because there's just simply not alignment around the consistency across these different stakeholders. What we also saw was that SANIS introduced remote assessments and interviews. And kudos to them, they implemented those right at the beginning of lockdown. And we ran a webinar a while back and we invited SANIS to present. And I think, whilst they're unable to commit to it, what we've seen is that we're pretty certain that certainly elements of remote assessments and interviews are here to stay beyond COVID. And my sense is that they'll probably feel a little bit of pressure and be compelled to keep that in place beyond lockdown. We know that companies use a variety of different solutions or approaches to manage BE compliance and to prepare for their BE scorecard audit. Similarly, we see that verification agencies are using a myriad of different solutions to audit scorecards. So, and I think there are two elements to that. The one thing that's quite concerning is the extent to which spreadsheets are used and the risk associated with spreadsheets. But what is, at the same time, what's quite encouraging is that there are VAs out there that are starting to embrace some level of digitization, although fairly rudimentary at this stage. So what isn't digital? So we see that, as I've alluded to, many rating agencies are using some form of spreadsheet-based solution to run their audit processes. We also know that largely because of that, clients have to populate data capture sheets in spreadsheets. They're based on the format of the VA, which is generally a very different format to how they're tracking data within their own businesses. So there's a lot of data manipulation and editing within spreadsheets. And what's quite surprising is that in this era of data protection, where we've got POPI and GDPR, it amazes me that the confidential information that's transferred between stakeholders, whether it's internally within the business or to consultants or to the rating agencies, and that's done using spreadsheets and email. In a lot of instances, evidence is still transferred in hard copy or via email. We are seeing more and more third-party file sharing apps that are being used. We also see that clients really have limited visibility of their scorecard and the progress of the audit. So, in many instances, it remains a bit of a mystery as to, for companies, will they achieve their compliance level or not through the audit? Is it going to be higher? Is it going to be lower? It, in general, sort of remains a bit of a mystery. Once again, we ran a webinar a few weeks ago, and we ran some polls. What was encouraging there is that 83% of the respondents are keen to contribute towards an AI-based advisory solution. And this webinar was just for BEE consultants and rating agencies. So, that's encouraging, is that we're seeing the industry's ready to start embracing technology in different ways. We saw 85% of respondents are ready to, or are already conducting video-based interviews and remote assessments. So once again, I think most of the respondents there were rating agencies, and they're embracing video technology. 92% of respondents believe end-to-end remote and digital verification is the new normal. And 83% of respondents agree that digital technologies will reduce the cost of BEE compliance. And I think that's quite important as well, is that, in this environment, there is a cost associated with BEE compliance, not just around the contributions or the training, but the actual cost to track and manage a scorecard, ensuring that you've got complete and accurate data sets, ensuring that evidence is in place, calculating a scorecard, understanding gaps, and all those, the different components of a BEE compliance management journey. There's a cost associated with that. And, like with many elements of digitization, that can hopefully reduce the cost of compliance. So what does the future look like? We feel that, or we're starting to see that the synchronization of data from source systems. So what we mean by a source system is your payroll system, or your learner management system, or your finance system. We're seeing more and more that data can flow directly from a source system into a BEE calculator. And that enables companies to be more proactive around their compliance management, see what their scorecard is, almost on demand, which is becoming important, particularly in this environment where profits are either decreasing or increasing. There's a lot of change around total salary and wages, or workforce numbers. So it is relatively dynamic, and it's important for companies to understand the impact and how to counter that. We're seeing that data and evidence is being digitally shared with their rating agencies. It's being remotely assessed. We've spoken about that. There are video interviews happening now. We're seeing more and more alignment in terms of calculations and the consistency of interpretation, but I believe we've got a long way to go. And certainly, when we engaged with the consulting and rating agency sector a few weeks ago, there was definitely an imperative to collaborate more and work together. And one of the objectives would be to drive some level of consistency. And it's interesting because even the BEE commissioner has pretty much informally mandated the industry itself to self-regulate and to have a voice around, compliance and interpretation. But it's slow. We're not seeing much progress there, but it'll come. What's important, and I go back to POPI and GDPR, is, we've got to find ways to mitigate the risks associated with sharing what really is highly confidential data and evidence. So what we're starting to see is that a VA can go into a client's calculator and actually sample within their scorecard. So everything is done online, digitally, securely, and safely. And then having a digital audit file post-verification is important, not just for a rating agency, but for the measured entity that's been verified. So we've seen, we've worked closely with Mazars for months now. They've taken a proactive approach to enable the digitization of BEE compliance. We've partnered with them, and Mazars has launched ZAR Score. And what we did there is we took what is in effect an enterprise solution, and we broke it down into its core elements so that we could introduce a really cost-effective solutions for companies to digitally prepare for and undertake a scorecard verification. So with Mazars Score, once the client's ready to commence their scorecard verification process, they can actually open up their scorecard calculator and effectively their software account, and that their verification agency can go directly into that software and start sampling data and evidence. From an Mpowered perspective, we've been working with over 30 BEE consultants to digitize their internal business processes. And it's been an interesting journey, that, because we see that a lot of consultants, and we're seeing it now with rating agencies, they're quite keen to digitize their internal business process using different technologies. But what I found quite interesting is that they're not sharing that experience with their customers. So the customer experience is actually still quite manual and therefore arguably quite tedious. But we're seeing some green shoots there. There are quite a few consultancies that are now saying, we actually need to enable a digital experience for our clients as well, so that we can all be on one platform where, if you can imagine, the client is tracking and measuring their scorecard, their consultants can advise them off the same platform, and in effect, their rating agency would also audit them off the same platform. So that's our objective as Mazars and Mpowered, is to really start enabling the digitization, not just for measured entities, but also for consultants and rating agencies. And we're looking to achieve that with Mazars Score. So, a key thing there is that, digitization is one thing, but at the end of the day, we've got to look at, well, what's the value proposition? And we see that digitization, whether it's in BEE or beyond, the objective must be to, certainly in our environment, reduce the total cost of compliance. And that's certainly what we're working towards. But it's all well and good talking about digitization, but our business is ready for that. And Darren's going to give us a perspective on that.
Good morning, everybody, and thank you for your time and investing your time in this webinar, because obviously there's a lot of pertinent points being thrown around and there's a lot of information. It's maybe a little bit of an information overload. So I'm not here to speak about BEE codes or anything. I'm going to lean on, well, I've spoken to Sandika many times about that, and I'm going to lean on her to answer any questions that you have with regards to BEE compliance from a learning perspective. I can answer so much, but Sandika really is the expert there. But just quickly, if you guys can go, I'm talking to the attendees, if you can please go into the chat room and just give me an understanding of yes or a no. How comfortable are you when it comes to digitizing your business? So taking your business and digitizing processes, saving costs and times, reducing overheads. Give me a yes if you feel that you're on top of it. Give me a no if you feel that it's something that's very scary and it haunts you. So I just want to get a little bit of a feel. Fantastic. There's not one no. That's brilliant. Yes, we are prepared. Anita Detoy, that's brilliant. Okay, fantastic. So I'm getting a feel for the audience. Everybody is on top of their digitization. So I'm going to take you through something very unique. It's actually built by one of my business partners, Brett Will. And this is I want you to think of it as a business dashboard, right? And it's backed by 23 theoretical frameworks, and this is the business landscape. And I'm not going to go through the whole thing, otherwise we're going to spend the whole day here, but just a quick perspective of understanding business. And it's important, especially when it comes to a conversation like this, where I want to encourage all of you to think in 3 horizons. And that's, as you can see on the left-hand side, that's the now, the next, and the future. What happens is a lot of businesses who we deal with are looking at the now, and they're worrying about, for example, when it comes to BE, what about my compliance now? What about this year? And I'm not here to talk about BE, as I told you, but also from a digitization point of view. What we found in the digital world is Zoom has all of a sudden become the plaster, and everybody's using Zoom as a learning tool, and everybody's using Zoom as a meeting tool. Yes, Zoom is a meeting tool. It's not a learning tool, really. And we can also go into a debate about that another time. But the point is that you cannot be anchored into the status quo of where we were. I think Mukhadi spoke earlier, and she said, we don't know, we're not psychics, we're not prophets. We don't know when COVID, if we're going to have another lockdown, I don't know. We don't know when there's going to be any easing of restrictions. and we don't know how the world's going to go. I truly believe that we've entered into a new realm of understanding how business works. But just quickly touching on the business landscape, if you look at the bottom over there, we always use a little acronym there, PRESTIC, and you can also call it RESPECT. But that's looking at your external environment and what risks are posed to your business. And that's something that's really important to look at. Not many businesses actually look at this. And speaking from a BE perspective, you're obviously looking at a regulatory risk. And obviously from our discussion today, we're talking about a technological risk. But then, the other external risk factors which affect your business will also obviously come up, being, social, competitive, and anything else. Obviously, there's environmental and political risks in this country too, but I'm not going to touch on that. But the point is that what I want you to understand is that you've got to assess what are those external risks that are going to affect the digitization of my business, and not just now, but also in the next 2 to 3 years, and then future 5 years and going forward. So I just encourage all of you just to think about those 3 horizons. And just looking at the business landscape, if you can see that a supply ecosystem, what we found, especially in the businesses, businesses we've been dealing with, we've spoken to many people, run many webinars, and COVID is actually, I'm not going to use the word damaged. I think it's maybe too strong a word, but it's kind of given the supply ecosystem and the supply chain a punch, where businesses have kind of said, do you know what? The supply chain doesn't matter. What matters is my customers, my customers, my customers. And yes, customers are so important, especially when it comes to digitization, and you'll see where I'm going now. But your suppliers are also so important. And I just want you to understand that, because if you have a supplier who's obviously even a small business, and when it comes to BE, you have suppliers who are BE compliant, and you're going to obviously base your scorecard and you're going to obtain those credits. So the supply chain obviously is very important. The whole point of this business landscape is actually in that operational wheel in the middle, towards the right-hand side, and that's your purpose of your business. So anyway, I can speak about this for hours and hours. I'm not going to. All I wanted to speak to you about was the 3 horizons, and then just understanding that you have those external risks. And those external risks obviously will affect your businesses, and you have to obviously look at the opportunities that those risks can also provide, not just the threats, and then which markets and which segments you're going to align with. And why am I speaking about this when it comes to digitization? Okay, great. So we actually run a program with Henley Business School, and we've done it for a few of the banks. It's called Business Landscape and Digital Ecosystems. And it's a systems perspective. And what's really interesting is we speak to them about digitizing businesses. And yes, we are obviously involved in the learning world and the world of education technology, and how can we provide learning solutions. At the same time, we've fully digitized our business, and we are a business just like any other business. So whether you're in the banking industry, whether you're in the retail industry, and we're seeing a lot of retailers now coming to us, or whether you're in the learning industry, if you're looking at what Bruce just spoke about, in the compliance industry and regulatory industry, we can digitize. We cannot stick to that status quo. So what we always speak about when it comes to digital ecosystem is, how can you improve your business? How can you manage your overheads? How can you manage your people? How can you add more value to your customer through digital expertise and through digital systems? So I just put a little description there of what a digital ecosystem is, in case people are lost. But a digital ecosystem, I mean, I don't want to read it, but I'm going to read it. A digital ecosystem is a group of interconnected information technology resources that can function as a unit. My point over here is automation, automation, automation. And the question often comes up is, Darren, how do we automate? Because we've got so many staff, they do everything for us in any case. And the subject of the discussion is not are robots taking over and the fourth industrial revolution. That's not the point of the conversation. The point of the conversation is, how can we improve business performance? And the reason that digital ecosystems are so important, and before I actually get there, let me give you a great example of what a digital ecosystem is. And I'm going to give you one simple example. This is a very, very, very basic example. So I'm going to give you an example from our business. For example, if we look at an online course that we've created. Now, if I go and I take Bruce and Mohammed and Sindika, I'll say the 3 of them are going to be my coaches. We're going to create an online course on BE compliance. And there are many BE compliance and training modules out there. But how can we attract an audience? Okay, so I don't want to sell the course up front because we don't want to just push a sale. What we want to do is we want to attract that audience. Now, I'm not talking only from a learning perspective. I'm also speaking from a marketing perspective. And if I want to attract an audience, if I want to motivate people, this is marketing. This is getting your staff to do anything, whatever it is, to motivate users even to learn. We have to obviously run a certain campaign. So what we do is we give something away for free. We add value. We say to them, here is a 10-step cheat sheet for compliance. Not a bad idea, Bruce and Mohammed and Sandika and the rest of the panel. I think that we can actually do something here. But how about giving people a free sample? So what we do is we advertise it, we put it up on social media, and we send people to a landing page. They put in their details and they get something for free. And the point is not showing you how to advertise. The point is to tell you, as soon as someone puts in their details, what happens is it automatically adds them to a leads list. It automatically sends them an email, and we start to nurture them. We start to communicate to them. We don't hard sell to them like you see everybody else doing in America, but we start to nurture them. And that's why in this ecosystem you see on the left-hand side of the screen towards the bottom, you'll see people entering in through social media. So we're leveraging off social media. We're then leveraging off our own technology. They then enter into a lead system, and it's automatically added to, for example, a Salesforce. It doesn't have to be Salesforce. That's just one CRM tool. As soon as they're added to the leads list, we can obviously start to communicate with our audience. Our audience then can buy from us, whatever your product is. And thereafter, they are immediately taken to a sales page, and they're invoiced, and your accounting records are all updated all at once. And that's a digital ecosystem it's just one segment of a digital ecosystem. There's actually an expert from Standard Bank, and I forgot his name, but he's an expert in digital ecosystems. That's what he speaks about. And the point is that our business is ready to digitize. And I know that at the top of the screen, you can see that says SMEs ready for digitalization. Digitalization and digitization are terms that are used interchangeably. And what do they really mean? So I don't want to go into the differences, but one means you're taking your face-to-face in-person content, and I'm not talking about learning content, I'm talking about your daily tasks, your manual tasks, and you're putting them into a digital format, if that makes sense. Whereas the other means we then take the next step, and we take those digital tools and we harness them for our business. So if you go back to that business landscape, the question then becomes how can we use these digital tools to understand our opportunities in our business and therefore improve business performance? And just the reason why going digital is just so important now, and I'm not urging you or imploring you to take the whole business digital, but we've been hit by COVID. And if you sit back and moan about COVID being obviously the end to everything, that's obviously the wrong tactic. The best tactic is to move forward and try new things, step out of the comfort zone. And it's just so important, as you can see on the right-hand side there, it improves business performance. There's no question about it, because tasks are just run faster, smoother. Inefficient and outdated systems, as Bruce was speaking about, BE verification through Excel. I mean, we used to run Excel workshops with my old business, but it's just amazing to see how many errors there are. 1% of businesses do not make errors on their spreadsheets. And it's a fascinating stat there that 99% of spreadsheets contain errors. And just one thing that's very important to me is adding value to the customer. It's not about, I always tell coaches and teachers and university lecturers when they're going digital, it's not about you. It's about the user. It's about the student. It's about the end user being your customer. So it's all about adding value to those customers. And as a result, everything else will follow. And then one big part is the reduction in cost and time. And that comes through automation, that everything works hand in hand with a click of a button. And then I put there asynchronous and flexible. That's more to do with the learning side, but it creates a lot of flexibility. And then lastly, I just threw in a few myths. Myths that we come across every single day from our clients is that they're worried about technology and cost. And I put there, it's never been easier. Everybody worries budget, because you see these expensive tools. And there are a lot of free tools out there that you can start to use. And if you don't like them, you change to another one. And then eventually you will have to make an investment. But does the investment have to be over a certain threshold? And the answer is no, it doesn't. It needs to suit your pocket, and there are technologies out there to suit your pocket. It takes time to implement something. It takes time to train your staff to use digital tools. It takes time to convert a system that is maybe a legacy and your antiquated systems into a digital system. But if you stick to a timetable and a blueprint, then you're on the right track. And we've witnessed that. We've experienced that firsthand. The next thing is we are not experts. We don't know how to use digital tools. So many people say, Darren, I don't know how to use SAP. I don't know how to use Oracle. I don't know how to use this learning tool. It takes a little bit of training. If you know, we used to say in the Excel training business, if you know just a touch more than anybody else in Excel, you look all of a sudden like a genius. So it's just about learning and improving every single day. The next thing is nobody will use it. That takes a campaign to train your staff training on digital tools. And one thing which is so important, a study came out the other day through LinkedIn Learning, actually, just with regards, not only in the learning space, but just also in championing digitalization. And when it comes to embracing a digital world or digital handover, CEOs, C-suite executives, and management have to be involved. And it's sad to know that only 27%, or maybe 27% is actually a good stat, but only 27% of people, of CEOs, and managers are actually involved in the digital tools and digital nurturing as well as learning. And they have to be at the forefront. It has to be from bird's eye rather than grassroots. And that's how you're going to, that's how you're really going to embrace a culture of digital learning and digitization in your firm. And then the last one is everything has to be perfect. There's no such thing as perfect. And if you aim for perfection, you're never going to actually get started. So I encourage you just to get started. If you have questions, you can see my emails. My email address is on the side over there. Feel free to email me and get in touch. And I'm looking forward to hearing your question, well, seeing your questions on the Q&A. And thank you everybody for your time.
Great, Dan. I really appreciate that. Thanks. Yeah, I think it was, I appreciate everyone's input. I'd just like to pose a question to, where's my question, to Mohammed. You know, we've spoken about using technology. If a measured entity is using some form of technology, if and how does it simplify the verification process? But more to the point, you know, we understand that a VA has to follow a set audit procedure. So there's no room to deviate for a rating agency. So we understand that. But what's the benefit, in your opinion, for a measured entity to use software? And I think where I'm going with that is it a pipe dream to think that using technology can reduce the total cost of compliance? Or do you think it's possible?
Okay, Bruce. So, you know, over the past few months, we've really gotten to use a lot of technology, whether it's Excel. We've got very familiar with some of the BE software programs. Even with some of the current software, BE software, we've also improved on it. We've had some developments on it, and what this has done is, and you know, I've always believed in, you know, you can go and do some research on this. It's about blockchain processes. So ideally what blockchain is if you have 5 processes, in order to move from one process to the next, you need to sign off the first one. Example is process 1 before you can go into the second one. And that is actually what the Art 47 guide, or, you know, SANAS is all about. There isn't, you know, there shouldn't be room for you signing off something today, or you completing a process now, but process 1 is still lingering or hasn't been completed. And as a result, it will get, you know, signed off or maybe completed after process 2, you know. So they currently, you know, they want to follow this process of from beginning, sequential numbering, it's from the beginning to the end. And I believe that, you know, these softwares, and once we start developing them, you know, and it takes time, it will create that efficiency, because more than often we find that a lot of verifications, well, I wouldn't say now recently, but I mean in the past, what they've done is when you're doing a verification, you complete the verification and, oh no, there's one thing missing, or there's a step that's been missing. And to be honest, and not to go into, you know, some of the issues, or, SANA's requirements, is that you would end up getting likely you'll end up getting a non-conformance because of that. And what we're trying to do is, when it comes to software, and if I'm digressing too much from your question, please just stop me. I feel that in order to have this, and once we develop the software, it only creates efficiency. It will only enhance things, especially when we digitizing the BEE space. When everything gets completed in a sequential numbering, it only leads to everyone taking responsibility, or each verification staff member taking responsibility of their role, completing their task at hand, and eventually having a complete file. Having everything electronically digitized, I think that's the way. We've heard many incidents of Google, of many software development entities that have gone to the space of saying everything should be done remotely. And this pandemic has actually opened up a lot of areas and made us realize that things can be done this way instead of the old ways. And to be honest, a lot of the verifications in the past is predominantly manual. These files had to be completed manually. If you're going through your annual assessment, it needed to be produced manually. And as we progressing, even SANAS is assessing verifications remotely. So I'm finding it very difficult to go back to the old ways, and I think this is the way forward.
To the panelists, have you guys got any questions that you'd like to pose to another panelist?
Yeah, maybe let me ask a question to Sandika regarding to the businesses that are going to be realigning their financial position. Obviously, most of the businesses are going to make loss. How would you advise them? Because we know that when they use industry norm, Statistics South Africa will be issuing quarterly figures, but those quarterly figures are a year old, if you want to put it, because they will collate from their population today and analyze it and issue it next year around this time, which means what the businesses will be projecting will be using the past financial stats. So how will you advise the measured entity or your clients when it comes to using the industry norm?
Thanks, Mokadi. As you know, like we said, we're going to be looking at projections, but your indicative profit margin. So we go back 5 years on your financials and determine what is your indicative. And if you have been making a loss, yes, we'll go to the industry norm. In my opinion, the whole country is, or the whole economy is in the same boat. So those figures may be a year old. However, I don't think it would be far off from that industry, from the indicative.
Sorry, if I may, I think it's, it is spot on. And as we discussed, the companies with a December year end, December 2019, and a February 2020 year, it doesn't affect them. It's all in the past. Whatever happened, they would have already budgeted for, they've already done. And if they were doing, contributions, or they were aligned, or they were reaching their targets in the last day of February, that's a completely different discussion. But everything going forward now, and this would be ultimately for your December year end, your June or December. June is over. So it's your December year end that really needs to be aligned. And that's what these indicative profits or these percentages may be adjusted, and that's again on the industry norm. If the industry norms get adjusted, then obviously it will have an impact on the current targets.
Sandika, there was a question posed around, it's rumored that yes, compliance has been relaxed to make provision for some skills development, EE, that might have reduced year on year. The question's not entirely clear, but do you have an opinion on that, please?
Yes, sure. So skills development as an element on the scorecard and yes are two separate components. So skills development talks to your current complement of staff and how you are training and developing those staff. Your yes talks to your targets based on your the annual turnover and your number of staff. So firstly, they're not related to each other. So your skills development targets are going to change according to the dynamics of your skills development levy, and as we discussed, the total payroll. The only relaxation that I am aware of from yes is with regards to year two companies that are in year 2 of yes. And previously you would have had to be, the learner would have had to be in employment for 8 months of your financial period to be eligible for yes points being carried. But I believe in the spirit of, in the spirit of good faith, if that hasn't happened due to the complexities of COVID and remote working or whatever business, the challenges business may be facing, there may be a relaxation on that component only, but not with regards to your skills development targets.
If I may, just on that, when it comes to skills development and the YES program, it's completely separate. An example is the absorption of the one is different to the absorption of the other. Example, skills development and YES absorption. From my recent talks with YES, with the CEO, they've highlighted that's 100% correct. They, as long as it's act in good faith, and with a lot of entities, including ourselves, who have followed or have taken part in the initiatives, the YES initiatives, it leaves us leaves most entities in a very difficult situation, because you have these YES candidates that have started, but basically nothing to do, for about 3 or 4 months. And as long as, we've demonstrated, according to YES, as long as we've demonstrated that we have taken the initiative and we have done it, it's a matter of them deciding whether it will be accepted, because ultimately they're a separate component on their own. And as long as we've acted in good faith, I'm going with what the COS says, that they will definitely take the YES scoring into consideration.
I'm just going through the questions. There's not much coming through. I think one other question from Tianus was on skills development. What documentary evidence will verification agencies require for online learning? And I would pose that to Mohammed or Makhadi, please.
I'm happy to take this one, Makhadi. You can jump in at any point, and I think you have the experiences as well. So I don't think there's anything different to what we're currently submitting. Everything is as it is, whether it's the working place skills plan, annual training report, CETA registration, learnership agreements, and if my answer is not clear, then maybe we should chat offline, or maybe my details can be provided. In terms of what we would verify is exactly the same as before. If it's done online, we'd need the supporting documents, whether it's been done electronically. There would be some kind of confirmation that learnerships have been conducted, and all of that would have to be submitted as it was previously. And not to forget that, whether it's online learning or whether we verify online, it's always been there. It's just that now we're focusing more on it because of the global pandemic. So the answer to that would be as it is. If not, there might be a little bit more procedures which have been discussed in the SANA's release, what should be done. Example, when we're doing these verifications, it's an online video recording, those type of things, which is minimal, but I think the majority of the requirements are still as the verification manual has suggested.
So yeah, I think on behalf of both Mazars and Mpowered, thanks to the panelists for putting in a lot of time to prepare for this. Thanks for all the participants for attending. I hope you got value out of it. And yeah, stay safe, stay healthy, and all the best. Thanks very much.